So in this lesson, what we're going to talk about is trend analysis. And we're moving on to trend analysis first because trend analysis is essentially the same. If you get the concept, you can do it with just common size analysis values as well as those and all the other ratio values. So we're going to do it before we complicate things with a lot of stats, a lot of different calculations, because right now you only have two formulas, right? So if you want to follow along, what you're probably going to need is my website, jeffboulton.ca, from which you're going to probably want these four files, right? The first one being the financial analysis note that sort of summarizes everything. This Apple Incorporated data file that we used last time in the last lesson. This time though, I've gone ahead and I've already calculated all the common size analysis values. You also might want, probably not, the common size analysis formulas, not really necessary, and you might want to have open a Yahoo Finance page just because we're going to talk about that for a brief second. So let's look at the financial analysis note for a second. Right? If you look down here past types of analysis, then on to the purpose, past the purpose, past those different financial statistic types, actually down here to the process of analysis. And this is the same whether you're using ratios, whether you're using formulas and things that aren't even taught in grade 11 or grade 12 accounting. Right? The third step, after you've done all your calculations and you've spotted your red flags, what you need to do is look for glaring differences or trends. Right? And some of the ways that you can do that we're going to talk about in this lesson. All right? The whole idea is, of course, so that you can interpret the statistics. Remember, the purpose of our financial analysis sort of topic is so that you can figure out how real accounting, so how accounting is actually used, particularly with reference to stocks and investments and things like that. If you can spot the trends, then you might have to try and figure out why this happened. All right, and the next note, of course, is the trends. And I'm going to talk about each of them in turn, but first, grab yourself a copy of those data files if you want. Otherwise, just follow along. Okay, our first trend, our first tip, if you look, it tells you that you're looking for something that has a sharp increase or decrease without the same corresponding change in something that's related. And the example is, if all of a sudden you're trying to generate more sales, your costs are probably going to be rising, maybe because of more advertising, you've bought more inventory in anticipation, or you spent more money on who knows, decorating, the new shelves, new uniforms for your employees, whatever, right? So if you're seeing that sudden increase in cost, but you're not seeing an increase in revenue, that's a problem, and it should stand out on a common size analysis sheet. So let's take a look for a second. Now, as most of us know, at least in the years that I've covered, right, from 2010 to 2012, Apple was an exceptional company with exceptional profit and exceptional sales, like bar none in the world. So you're probably not going to find the kind of trend that's negative. You're probably going to find the trend that you hope to see. And you do if you go down to the income statement, which I have the common size analysis for as well, right? Over here, you will see that the cost of revenue, and you see over here with the actual numbers that revenue has increased. Remember, these are in thousands, so that's $65 billion. That's $156 billion 2 years later. So revenue has clearly been rising, skyrocketing. Look at the cost of revenue. In other words, the cost of goods that they're selling, the cost of generating that revenue is actually falling as a percentage of revenue. That's the best of both worlds. You got more sales, and the cost of those sales per dollar are falling. So that's what gross profit is. It's the difference between your revenue and the cost of generating it, and it's been rising. Now, one of the first things the stock market and investors are going to look to when earnings are released each quarter or each year is this number, sometimes referred to as gross profit, sometimes called gross margin, but that's essentially your profit before your operating expenses. That's one of the most important numbers. So, an example of maybe what a negative trend might look like. If you scroll up to the balance sheet and you take a look at current assets, take a look from 2010 down to 2012, right? 2012. The percentage of all assets that are short-term liquid assets has been falling. That's a problem that we'll learn about when we talk about ratio analysis, when we talk about the actual solvency ratios. When you don't have enough money to pay your debts, that's a problem, and you pay them with current assets. So that could be a problem until you look at total current liabilities, which have also been falling. So it's not necessarily an issue, but those are the types of things you look for. Let's go back and look at the next one then. 2. A prolonged period where an item is rising or falling. That could be a good thing or a bad thing depending on what it is, and you've already seen some of those with Apple. A prolonged period of time where there is no trend, don't panic, that's a trend. It means usually they don't know what they're doing, management, or the company or the industry, the whole industry is in turmoil. It can mean a whole bunch of different things. It can mean that there is no pattern, that there's a bunch of changes, everything's in flux. No trend can be a trend. Number 4, we're not looking at graphs in this particular grade level in this lesson, but values, lines, they're the same thing. One is a graphical representation of the other. So what you want to do is see if numbers are getting farther apart or closer together, and that's really important when you're talking about mostly the income statement. So if you're seeing revenue rise, but you're seeing cost of revenue rise with it, in fact, so much so that it's getting to be closer to revenue, that means it's getting more and more expensive for you to generate that revenue. The goods that you're reselling are getting more and more expensive, right? Those are the types of things you're looking for. And as I've already pointed out, if we go here to Apple, to their income statement down below, the opposite has happened during this period of time, right? Its cost of revenue has gone down, which means its gross profit has gone up over those 3 years. Okay, so last point. Let's go back to our note. What do we got? Well, number 5. When you discover or uncover or find one of these trends, a number that's really different from all the ones around it, like the years before and the years after, or a noticeable trend over time that's consistent, the numbers rising or numbers falling, before you reach a final decision, you have to check other firms in the same industry, because although that might be strange, right? It might be strange to find that number. It might actually be perfectly normal to see that trend, right? The whole industry might be experiencing that trend. So before you pass judgment on this individual firm that you're analyzing, just because of a trend or an anomaly that you've spotted, you have to check with other firms. So from here, if you go to this tab, right, or if you yourself open up Yahoo Finance, and I mean, we're talking about Apple, so over here, just search for Apple, or if this has changed by the time you watch this video, find where you put in the stock quote and search for Apple. And you'll get the option down here along the side, or somewhere on the page you should, to look at competitors, or even the industry. In this case, Apple's competitors include companies like Google, Hewlett-Packard, BlackBerry, Samsung's in there, it depends, right? And you can get more or less information depending on the website. But the most important thing is you can find out, with Apple it's not hard, but with other companies you might not know who the competitors are, to be able to measure the firm you're analyzing with the industry standard and other firms to see if they have similar values. Finding red flags is basically a simple way of saying doing a trend analysis. Look for trends. Look for anomalies, things that stand out in a trend, or look for a lack of a trend. But then you're not done, right? Once you've got those identified, go back to the note and scroll up. The process of analysis and interpretation involves interpreting what you have, right? Interpreting what you have found. Once you, in step 3, find those trends or find those red flags, you have to interpret what could have caused them, what must be going on, what might be going on. Then you can start to draw some conclusions about why a stock is reacting a certain way as a result of financial information, and maybe even project the trend and decide if this would be a firm that you would want to invest in or not.